Hello and welcome to the Tradingview part of the tutorial. What is Tradingview? Tradingview is a charting platform and social network that is used by retail traders and institutional investors to analyze financial assets. These financial instruments include stocks, currencies, indices, forex, futures, bonds, or even cryptocurrencies. At their most basic form, TradingView charts offer a high-level overview and assess performance over a certain amount of time. This includes the open, high, low, and close price for each candlestick. On the top of that, TradingView has developed its own scripting language called PineScript, which enables users to customize the tools. What sets TradingView apart is the social component that is native to its chart tools. Users can follow other traders, publish their own charts and investments, or even live stream themselves via analyzing charts. On the top of that, TradingView also shares various financial news and updates such as a financial calendar for earning updates. The TradingView platform can be accessed by visiting its website as well as by downloading its desktop or mobile application. Even it is available in iOS. Okay, as you can see, I'm already in the TradingView website. For making account, it's so easy. You just go to get a start. It shows you the plans they have, Pro Plus, and Premium. You can read their options and choose which one you want if you want to pay for the website. But if you want to use it as a free version, you go here and you try to sign into your account. In the Google, use one of your Gmails, and yeah, you are connected. So easy, so fast. Okay, for seeing the charts, you go to the charts part. Here you can see the candlestick charts. This is the things that you can see the charts about. For example, Euro to USD, BTC to USD, and we're going to customize it because our topic is about crypto. We only talk about how use it as a cryptocurrency analysis. Okay, with this plus, you can add every coin or everything you want. For example, BTC to USDT. As you can see, I choose the Binance because I already teach you the Binance. Or another one, Ethereum, ETH USDT. Again, I use Binance. Or another one, for example, LTC USDT. Again, Binance. And you see, it will show up here, and I don't need to search for them next time I need it. I just click on that, and I can see the charts. And with here is a one part for indicators and timing. In this DUC, you can select the time that you can see. Okay, the candles will be in 1 minute. You can see the candles show in 1 minute. Every candle start in the first of the minute and end in the end of the minute. Or you can say in the 15 minutes, every candle takes 15 minutes to close. Or you can see as a day. Okay, here is a daily candle of the Bitcoins. And with here, you can choose to see candles or bars or other things like areas and lines. It show you how the chart works. For example, I use the line and I see the chart as a line, or I use area and I can see the area parts of the chart or candles. Here is indicators. You can add or remove any indicators that you need. You can search here, or You can choose from here. And this part is alert. Okay, you choose, for example, to put a date and time or a price. Here you can use a price alert or timing or daying and create your alert on TradingView. And here is your toolbox. This one you can create through line with that. For example, a trend line, arrow, or Y or horizontal line. With this part, you can find other things like Fibonacci and pitchfork. In this part is brushing. You can choose brush or highlighter, and as you can see, just draw in your charts. Okay, I remove this part. Yeah. Okay, here you can add text to your charts. For example, hello. And you can grab it and move it. And with here, it's called patterns. You can select your patterns and draw it. This part, prediction. With this one, you can see the long position that you want or the short one also. Again, here is your ruler. The ruler show how much you between two candles or every place you want in the trend is a profit. For example, here when I draw it, it shows me 51% decrease, or here 8% increase. With this one you can use, and this one is a magnet. How the magnets work. For example, I use a strong magnet and I draw a line. You see that my line will stick to the candles, to the charts. But if I don't use it and draw my candle can be anywhere. But if I use it and I move it, it will stick to the candle. And this is the basic tutorial of the TradingView. What is a website and how is a website work? First thing that you need is indicators. The most famous one, RSI, Relative Strength Index. You can mark the indicators or start them the way how I showed you, and you can add it to the charts. But what is RSI? Is a well-versed momentum-based oscillator which is used to measure the speed or velocity as well as the change or magnitude of direction price movements. Essentially, the RSI when graphed provides a visual mean to monitor both the current as well as historical strengths and weaknesses of a particular market. The strengths or weaknesses is based on closing prices over the duration of a specific trading period, creating a reliable metric of price and momentum changes. Given the popularity of cash-settled instruments, stock indexes, and leveraged financial products, the entire field of derivatives, RSI has proven to be a viable indicator of price movement. J. Wilder invented momentum oscillator that estimates price changes by measuring how quickly in which direction prices move. The RSI may be anything between 0 and 100. According to author Donald J. Wilder, RSI is overbought when it rises over 70 and oversold when it falls below 30. There are several ways to use swinging points, divergences, and crossing the central line, the product signals or pseudo signals. Furthermore, the RSI is often utilized to detect the unfolding trend. It is very important to pay attention to the main trend to guarantee those indicator findings are correctly interpreted. According to the Costenz Brown, CMT, a well-known market analyst, A reading of the RSI that is much higher than a historical average would indicate a bullish trend, while a reading that is significantly lower than the historical average would signal a bearish trend. And in an easier way, uh, if I want to explain to you, you see this is the line of 70. Let me collapse the pane. Yeah. Okay. Oh, maximize it. Sorry. If it goes above 70, it means it is we have the maximize in the buying in the selling orders. Most of the people are selling, and the price is probably going to come down. And when it's go below 30, it means we are maximized in buying orders. It means most of the people is going to buy. Then the price will go back between 30 to 70 again. The next indicators I'm going to talk about is called OBV. Okay, we added like any other way. We search it here. OBV, unbalanced volume. The unbalanced volume indicator is used in a technical analysis to measure buying and selling pressure. It is a cumulative indicator, meaning that on days where price went up, that day's volume is added to the cumulative OBV total. If price went down, then that day's volume is subtracted from the OBV total. Granville believed that volume was a key force behind the market and designed OBV to project when major moves in the market would occur based on volume changes. In his book, he described the predictions guaranteed by OBV as a spring being wound tightly. He believed that when the volume increases sharply without a significant change in the stock's price, the price will eventually jump upward or fall downward. His theory behind OBV is based on the distinction between smart money, namely institutional investors, and less retail investors. As mutual funds and pension funds begin to buy into an issue that retail investors are selling, volume may increase even as the price remains relatively level. Eventually, volume drives the price upward. At that point, larger investors begin to sell, and the smaller investors begin to buy. The next indicators is called MACD, moving average. Okay, as you see, MACD is so harder to read than the others. I close the two others to concentrate on the MACD. The MACD is extremely popular indicators used in technical analysis. It can be used to identify aspects of security overall trend. Most notably, these aspects are momentum as well as trend direction and duration. What makes the MACD so informative is that it is actually the combination of two different types of indicators. First, the MACD employs two moving average of varying lengths, which are lagging indicators, to identify trend direction and duration. Then it takes the difference in value between those two moving average, MACD line, and EMA of those moving average, signal line, and plot that differences between the two lines as a histogram which oscillates above and below a center zero line. The histogram is used as a good indication of a security's momentum. Now I explain MACD in the pictures so it's so easy I think for you to understand how MACD work. As you can see in this picture, MACD crossing above the zero. This is the zero crosses above the zero, MACD, and MACD crosses below the zero. MACD crossing above zero here is considered as a bullish, while crossing below zero is bearish here. Secondly, when MACD turns up from below zero, it is considered bullish. When it is turns down from above zero, it is considered bearish. When the MACD line crosses from below to above the signal line, the indicator is considered bullish. The further below the zero line, the stronger the signal. When the MACD line crosses from above to below the signal line, the indicator is considered bearish. The further above the zero line, the stronger the signal. In the second picture, when the MACD line crosses from below to above the signal line, the indicator is considered bullish. The further below the zero line, the line is stronger in the signal. When the MACD line crosses from above to below the signal line, the indicator is considered bearish. The further above the zero line, the stronger the signal. During trading ranges, the MACD will whipsaw, with the fast line crossing back and forth across signal line. Users of the MACD generally avoid trading in this situation or close positioning to reduce volatility with the portfolio. Divergence between the MACD and the price action is a stronger signal when it's confirmed the crossover signals. And in the third picture, as you can see, during trading ranges, the MACD will whipsaw with a fast line crossing back and forth across the signal line. Users of the MACD generally avoid trading in this situation or close positioning to reduce volatility within the portfolio. Divergence between the MACD and the price action is a stronger signal when it confirms the crossover signals. And back to TradingView. In the really easy way, if I explain the MACD to you, as you can see, okay, this is the ad. This line is called zero line in the MACD. When it goes above this line, it means increasing in the price and we have blue candles. And when it goes downer than this line, it means decrease on the price and we have red candles. As much as this red candles is bigger and more red, the signal are more stronger. This is the easiest way that you can understand how MACD work. And in the last part, the most simple thing in the analysis and the most important one is called trend line. A trend line is bounding line for the price movement of the security. It is formed when a line can be drawn between a minimum of three or more price pivot points. A line can be drawn between any 2 points, but it does not qualify as a trend line until tested. We have two types of line, uptrend line and downtrend line. If I want to show you how it works, okay, in downtrend line, we use the down pivots. For example, brush it for you. Here is one down pivot. Again, here is one down pivot. And here, or here, all of them is down. And in the upward, we use the high pivots like here, or here, and here. If we want to draw a trend line, we match these three to we started from this, go to another one, and go to another one. This is called the upward trend line. And the downward, again, we go this down three pivots, like here and here and here. And we always said the charts try to not break the trend. It all try to follow the trend. And when it broke one trend, this trend is finished and you should do another trend. Another thing called, okay, let me remove all of this, called parallel channel. The parallel channel is like the mix of upward and downward of the trend line, and you make a channel with it. And we always said the price try to move in the channel. For example, here. Oh, it's not. Yeah, yeah, it's working like this. We draw a channel for ourselves, like from here to here, the downwards and upwards together. As you can see, I use these two trends, but the price after that in this area follow my chart, my channel too. And this was the basic analysis that I could teach you about how to analyze a coin in a cryptocurrency and how to use the indicators.